from here to here, you had a nice little channel. And his implication is that if you want to be at the basic simple level, breaking this channel should mirror another channel higher, which puts us at 3,000. But by no means is that his target. That just is, that's how you eyeball it. I did the same thing and I eyeballed 2,700. And we're probably both right here. Well, I'll be right first and then he'll be right afterwards. But it could go a lot higher. Not today, not tomorrow. Get ready for the slam down.
On Tuesday, the global gold market is riding a wave of bullish momentum, with spot prices surging to a new record high above $2,525 per ounce. This latest milestone comes amid growing expectations of interest rate cuts from the U.S. Federal Reserve in September and the People's Bank of China's issuance of new gold import quotas. VinceLanci, a respected and influential financial market figure, closely followed the gold rally. A seasoned trader, market strategist, and thought leader, Lanci noted that the recent price action is consistent with historical patterns in gold bull markets. According to Lanci, Michael Oliver's technical analysis suggests a potential upside target of around $3,000 for gold. However, Lanci cautioned that this is merely an eyeball estimate, and not necessarily the final target. Lanci has independently estimated a potential upside level of $2,700. The gold market's strength has been further bolstered by its performance since the start of 2024. The precious metal entered the year trading at around $2,049 and has since climbed nearly 21% year-to-date, turning a $10,000 investment into $12,100 by August. The December gold futures contract technically holds a solid overall near-term technical advantage. The next upside objective is a close above the solid resistance level of $2,600. On the downside, the bears will be looking to push prices below the $2,450 support level. While the gold market continues to reach new highs, some analysts remain cautious about the potential for significant further gains in the remainder of the year. Lanci notes that gold bull markets typically do not end with a distribution top, characterized by repeated testing of the upper price channel, but rather tend to see sharp spikes followed by rapid declines. Please tune in for our exploration of VinceLanci's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Gold above 2,500, MSA's take. This picture here, let me see if it blows up here. Oh yeah, nice. This picture here is a replication of a channel that he's drawn. Now, this is not his momentum channel. It's just a price channel, right? So from here to here, you had a nice little channel. And his implication is that if you want to be at the basic simple level, breaking this channel should mirror another channel higher, which puts us at 3,000. But by no means is that his target. That just is, that's how you eyeball it. I did the same thing and I eyeballed 2,700 and we're probably both right here. Well, I'll be right first and then he'll be right afterwards. But it could go a lot higher. Not today, not tomorrow. Get ready for the slam down. And he puts some very important points on how the market is behaving going into this rally, this most recent spike. We happen to agree with him, approaching it from a different perspective. The unclenched fist, MSA identifies a critical breakout in the 36-month average momentum and the 100-week momentum charts, which occurred in late March. And there's the chart. There's a chart, right? This breakout marks the conclusion of a 3-year wide pause in gold's upward momentum, initiating a new phase characterized by accelerated price action. This chart is meant to depict that we have a congestion of resistance in that rectangle in the 2450 area. Daily chart, weekly chart, monthly chart, and all those things were broken at the same time, making them more significant, which is something he had alluded to previously. The breakout marks the conclusion of a 3-year wide pause in gold's upper momentum, initiating a new phase characterized by accelerated price action. Now, this is the chart that I had up top. His chart looks like this, right? And then he implies that, well, if you're above here, then you may as well just create a mirror channel for that. And I think that's reasonable, although I don't think he believes in that. I just think it's certainly a measure. It's a measure, right? I use the same thing in my own analysis where I said, this depth equals that height. These are just things to give you perspective. The multi-year parallel uptrend channel, which faced resistance around the 2450 level, has now been decisively breached. Okay. Next thing. cap and trade, not how gold bull markets end. Michael emphasizes that the repeated testing of the channel's upper boundary was not typical of gold's peak behavior, which historically involves sharp spikes followed by rapid declines. Anybody who's traded gold forever knows that the long wick above a market is the death knell. It's the cap, usually by the BIS or a bullion bank, that says, no more, you shall not pass, and the market goes lower. It does not go sideways. However, Michael notes that since April, this market has been going sideways since one of those, which says it's not the end of a bull market. Gold typically does not have a distribution top, right? If you're a Wyckoff type of person. All right. The clustering of price action since April was a clear precursor to the recent breakout. This is a repeat of action we identified going back in December of 2023 and called it cap and trade when the BIS was first seen keeping gold in a range, right?
The precious metals sector stood out in the commodity markets in 2024, with gold and silver posting stellar returns and attracting heavy bullish sentiment from investors. According to respected market analyst VinceLanci, the surging prices of gold, gold miners, and silver are set to outperform previous bull markets, driven by the intensifying global financial instability. Lanci's assessment is echoed by the impressive price action witnessed in gold and silver this year. The charts for the two commodities show a steady, almost uninterrupted rise, with only a few minor dips. Investors who positioned themselves early in the year have already generated handsome returns, and the potential for further profits remains high as the precious metals rally continues. Silver has outperformed gold by a large margin, defying market expectations. While the spotlight has been on gold's record-breaking run, silver has quietly emerged as the top-performing asset in the commodity space, generating even greater returns than its more established precious metal counterpart. Let's get back to the interview.
See these wicks here? See these lines that I drew? Line, 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 line. Every time this happened in the past, gold would sell off. Why? Because that's the Bank of International Settlements selling. And they're selling and the market's going sideways. And they're selling and the market's going sideways. Selling going sideways. Selling going sideways. Selling sideways. Selling sideways. Selling sideways. See that? That's cap and trade. Or if you look at Michael's perspective, he looks at this section here and he says, you know what, this market doesn't want to, not allowed to get above 2450, and now it is. Well, actually, it's more like in here, right? So the behavior that he's seeing technically is confirmed by the behavior of market participants over the years. Bank of International Settlements, bullion banks always cap a rally, and they always cap a rally to buy it. And it goes down because the hands that are long are weak. Well, the hands that are long are not weak this time. So same conclusion, different disciplines. I like that. Here we go. The cluster of price actions this April is a clear precursor to the recent breakout. This is a repeat of action we identified going back in December of 2023 and called it cap and trade. All right, I said that. All right. Michael notes this most recent one, I'll call it cap and trade, occurs at the top of a cluster of levels. This most recent breakout, I should say, occurs at the top of a cluster of levels going back years. More on that concept in special gold cap and trade model. That's our description of more elaborate of what I just said to you. All right, back to Michael's specific levels. Upside and then some. Utilizing traditional price chart analysis, Michael projects the next significant resistance level for gold to be above 3,000. He eyeballs it. Quoting him, bull trends in gold over the past 50 years have more often been at least eightfold moves. This one began from a low of 1050. You do the math, right? So that's why he says the 3,000 is an eyeball chart. While such projections are inherently speculative, this target is supported by the recent momentum breakout. So that chart that I'm showing you, you're like, okay, it's just a chart. But the more significant breakout we don't see, he's not showing us, is that his momentum system, it has broken out. So momentum breaks out, price confirms momentum, and then the market goes, which is also what's going on in silver. All right, maybe more than before. The analyst further argues that the current monetary environment, coupled with the dynamics in other asset classes, is more volatile and disruptive than at any time in the past 5 decades. There's evidence to that effect. Quoting him, recognize that the external monetary and other asset class factors that are in play and about to become more so are far more dynamic and upending than at any time in the past 50 years. More specifically, central banks facing unprecedented economic challenges are likely to engage in extensive monetary easing, which will further support gold's ascent. Michael anticipates that gold, along with miners and silver, will outperform previous bull markets, driven by the intensifying global financial instability. The real question is, what is 8 times 1050? I'm not going to say the number. You could say the number.
As the world grapples with growing economic challenges, the precious metals complex has emerged as a haven for investors seeking to protect and grow their wealth. With Lanci's bullish outlook and the robust price action witnessed so far, the potential for gold, silver, and related assets to outperform previous bull markets appears increasingly promising. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.